Hey traders, what's going on? Welcome back to another market recap. This week, I believe is a little more interesting. So without further ado, let's just jump right into what's going on. So if you're coming from last week's video where we know in the outlook that we said we would optimize, we would go through, we would make a little bit of adjustments from our typical way of analysis, so we can try to send less signals into the chat. So we can send more reliable signals into the chat. That's not how it went ultimately, because from the results that we got, I didn't really like the way that things performed. But nonetheless, this is a learning situation to see, to fail forward, as I mentioned earlier today in some other videos. So normally in the Telegram, we send around, let's say 5 to 8 trades for the week for the major pairs. That's the only thing we're covering there. This week, we sent about 30. We were taking both long and short trades on the same pair, and normally it's not like that. Normally it's just long or short only. So you'll get a better picture of what I mean by only long or only short for the week if you go back to any of the other videos I made about this Telegram, how we're taking trades. So let's just jump onto the first pair on the list, AU. So on AU, we actually went through and took just about 3 trades only for the week. We've only ended up taking trades, I believe, on the rejection just around here for number 1, number 2 on this rejection here, and number 3 on this rejection back to the upside. So with these 3 trades, about 2 of them were successful, and the last one here only brought in, I believe, around 10 or 5 to 10 pips, let's say. But nonetheless, none of our TPs were hit. It was not much of a bullish week, as we can see for this pair, as we were going through with the rejection of the support down below. Okay, so as we go through the other pairs and we're able to look at EU, GU, and all those pairs, we're going to get a very similar sense of correlation to understand that the US dollar was not very weak, predominantly weak among these pairs, as we would have expected as we were going through with the analysis. So that's just one thing to bear in mind with this. Here we have Euro USD, where another very similar sense, where we were taking our first trades longwards from the support, in this case just around here, to go to the upside. We can actually see our entry is still marked on there. Stop loss on the other side of the zone, that's fine. And our TP was at the next resistance. One thing I didn't like about this week as well is that a majority of these trades didn't have a good risk to reward ratio. They were positive risk to reward ratios, so they were at least 1 to 1 plus. But normally, personally, I only aim for 1 to 3 plus, so risk $1 to gain at least 3 on all of the trades. And most of the trades didn't line up for that way. I'm going to go through and I'm going to just give an overview at the end after we can look at all these charts, so we can see and just have an idea for the things that were done very badly this week, and the things that how we normally do them, and how we can pick up from that. Okay, so we can ignore the Fibonacci that we have on here. This was for some more personal trading. Let me delete this as well. And I went through and I sent these charts as we were taking them to the Telegram. Let me just pull this up here. So as we're going into the week, this was one of the trades we took on Euro USD. And here we can see how it actually panned out. Price consolidated for about 4, 5, 6 candles, about 4 or 5 candles, and then fell and hit its stop loss. We ended up taking a short position from the break below. It's a breakout trade. So we took a trade below. Maybe I can just draw it in like this, something like this, and TP was down here at the bottom. So a bit above risk 1 to gain. In this case, 1.47. Okay, and we hit our TP and we went off back to the upside. A lot of consolidation was happening in between these zones, and because of the wicks and everything, we didn't get a good risk to reward on our trade. As a total, we ended up getting 5 trades on this pair here, and we only won about one of them of 43 pips, and all the losses were 13 pips, 15 pips, 26 pips. So for Euro USD, we actually ended up taking about 5 trades. 3 of them were losers, 2 of them were winners. We won, I believe, 1 for 43 pips, and the more recent one we just closed off on Friday was probably about just about 10, 11, 12 pips or something like that. It's all in the Telegram. and then we ended up losing one for 13 pips, 15 pips, and 26 pips, okay? So like I said, this one didn't really perform the best. We got a lot of wicks where they produced bad risk to reward trades, or just not risk 1 to gain 3, and things along those lines, okay? So let's just jump to the next pair on Pound USD. So Pound USD actually generated 7 trades, in which case 6 of them were losers and 1 of them was a winner. So very similar to a few of the other pairs, this pair just consolidated. As we can see, this horizontal line here is the start of the week, and we just consolidated between this area for a while. Our latest trade that we took was on this bullish rejection from the downside, and we only ended up making just a few pips. How can I mark this off properly? Just about 6-7 pips on this pair. So we didn't do the best on this. But we can see that we're trading from the support rejections, tried to take this higher, expecting a break of this resistance, because a break of this resistance here, just because we have previous market structure going to the upside, and if the trend is to continue, we're supposed to get more uptrend indicators like higher high formations. Did not produce good risk to reward ratios, and then we were taking buy trades from support rejections, and then we're taking sell trades from resistance rejections as well. Okay, but the higher high trend formation did not come in. This support here spanning back, pretty old. We covered this in the market breakdown. This, I believe this is coming back from about 2018, if I'm not mistaken. Yeah, so just about March, April 2018 is the zone that we're at now. So pretty influential zone. Price has not been able to break it for a very long time. And one thing that's a good reminder is that we were drawing these zones from the daily time frame, right? So we can see on the daily time frame, we just get a whole bunch of consolidation and no clear direction, no clear structure and movement going on here. We ended up taking 7 trades on this. 6 of them were losers and 1 of them was a winner. Let's jump down to the next one, NU. So this one looks a bit more clear on this time frame, though we were not that successful. We ended up taking 5 trades on this pair here, just about 5, I believe, if my notes are correct. And we ended up winning 1 and losing 4. So like I said, this week just generated way more trades than I originally expected. You know, when we did the outlook for last week, we had the intentions. So with these zones being drawn on the daily time frame, we're actually on the 4-hour looking to take our entries. Started the week by this vertical line here, and we ended up just taking trades top to bottom. Bottom was not hit, stop loss pulled. We would have ended up trying to take a long position here on the breakout, and that was just not successful as well. Back to the downside where we got that nice winning trade, and then a whole lot of other iffy business, okay? So at some point in time, we were near our max loss for the week. So I slowed down on taking positions. You know, it's better to be safe than sorry ultimately. And so we just took the safer route towards the end of the week so we can re-prep, reorganize, and see our mistakes during this recap. We can understand how we can improve failing forward, basically understanding where our issues might have come from, how can we adjust to these, and compare this to the previous work that we've been doing in the Telegram. The first week in the Telegram was exceptional, really, really good. Second week was about, I believe, a 40 pip gain. And then the third week was about a 60, 70 pip gain. And then this week here was just a losing week. So this is something you also have to take into consideration with risk to reward. Understand that you will have some losing months, some winning weeks, some losing weeks, and you got to just understand the flow, the balance between those two, the process and all of that, because survival is one of the most important things. Okay, so like I said, we kind of just ranged between this support and resistance area as we seen on the Pound USD as well, right? We kind of stayed between this area. And then Euro USD, we more so went to the downside, but it's not the clearest of structure. We get downtrend structure here, and then higher high structure looking to come back in. Next week, as we go into the market outlook for next week, we will be taking the short words. That's just something we're gonna look out for when we go into the next video, okay? Let's touch on to the USDX pairs Here we have USD Canadian. So our analysis on this pair is not up. We did end up only taking 3 trades on this pair with 2 losses and 1 win. But nonetheless, we did not get good risk to reward ratios on this as well. We have 1 losing trade of 18 pips, 1 losing trade of 53 pips, and then 1 winner of 12 pips. Let's just see if we can see any of the markings of the trades that we actually ended up taking in the Telegram. So here's a setup here where we took for this week. We're going from the resistance to the support. We did take this trade. It was going really nicely. We ran into an intermediate support down in the mid-level there between the entry and the take profit. Price had a little reversal there back to the upside, and I believe we did take small profits there. We did take small profits there just to not have our, we were beyond break even at that point. We secured our 10 pips. In this case, it was just 12 actually. So that's how that went. And then the other trades that we took for the week ended up putting us in the negative. But here we can basically see we marked off the top as high resistance, we had low support, and then we had the mid-range. Let's see if we can copy this real quick. Something just along the lines of this. And remember, we are ignoring the last 5 days. So we would have went from top to bottom. Let me see. Yeah, so excluding the last 5 days with that horizontal blue line. Yeah, we went from the top, we were going to the bottom. We did not manage. Here we have that other zone. Let's see if I can make it a little thicker. We rejected there, right, with a bullish rejection back to the upside, and then we ended up getting out of our position just like this, right? And then we ended up taking more losses on these trades here. Okay, so let's just pop down to the next one. USD Swiss, we don't have our analysis on this pair either. We did end up taking just about 4 trades with 3 losers and 1 winner of 32 pips. Now, this analysis here, we can see this image right here. I hope we can see it a little better. This pair here actually consolidated within its support and resistance range all week. There was no main control, there was no main dominance of the USD or the Swiss in this case. Ultimately, with the EA in between these zones, with the candlestick rejections that it was producing, we also did not get good risk to reward ratios on our trade, which ended up just having our stop losses hit. Now, actually here, one thing worth noting is that we did take the bullish trade longwards. Our TP was hit on that one back to the next resistance, from support to resistance. That trade worked out fine, but with the bearish candlestick rejection of the resistance, we're attempting to take a trade back short, back to the support, with the resistance acting as the wall, as the area of reassurance in a way. Price just consolidated at that point, and our entry just stayed, and we ended up having to close as the week was ending, because that's what we do. As Friday comes, we're looking to close those trades, but not for. So let's pop down onto the last pair before I can really just get in depth. So here we have the USD JPY. At the start of the week, we did take a long trade, and here's one of those instances where we did not get a good risk to reward on a trade. We ended up taking risk 1 to gain 0.6. Poor risk to reward on the trade. But nonetheless, our TP was hit in this case here. As we popped up back to the upside, we ended up getting a lot of consolidation, a lot of losses that were not needed at this point in time, as price was in this area. I believe we did produce a long trade with this bullish candle in the resistance, and we ended up getting stopped out because the stop loss was on the other side of this zone. Ended up getting stopped out, went to the short side because we had the rejection of the resistance. Stop loss other side of the zone, and then you can see we did get popped out. We did get stopped out there, and then we did not end up going long because we were going with the correlation of the US dollar getting weaker, but that did not go in our favor as well. Okay, so this week a lot of things didn't go in our favor, but that's okay. Like I said before, we have a risk to reward in our head. We understand how many losses we can sustain for the week. And we understand that we will have losing weeks and winning weeks sometimes, but nonetheless, the winning weeks should be on top of the losing weeks, the losing streaks that we go on, because we will go on winning streaks and losing streaks as well. For this here on USD JPY, we ended up taking 3 trades, 2 losers with 1 winner. Our winner was 44 pips, and then we lost 1 on 7 pips and 1 on 11 pips. Okay, so that's just one thing I want to keep in mind for this week, guys. Okay, so before I wrap this video up, I just have 5 points I'd like to cover so I can give you guys some tips, and also these are the tips I will be implementing for next week. These are the things that I learned this week while trading in the market. So one thing that I'm already aware of, which I hope you guys are too, is risk to reward. So this week we did not produce the best risk to reward trades. Like here, we risk 1 to gain 0.6, which is not the best thing. If you're risking, let's say, $1 to gain $1, as a sum, you need to be gaining at least 51% of your trades. You need to be winning 51% of your trades if you are to make a profit in the market. Normally, we go with risk 1 to gain 3. That way, we can still keep a winning rate of about 30%. We only need to win 3 out of 10 trades and still come out on top. So that's one thing that we didn't get to implement to the fullest this week because we took poor risk to reward trades. Okay. Number 2 is the max loss. Okay, so towards the Thursday, I was nearing the max loss for my week. So what that ultimately means is every week I have a certain amount that I'm willing to lose. It's not my entire account. It's not 50% of my account. It's more so just around 10 to 20% of my account I'm willing to lose for the week. Once I've lost that, I'm completely done for the week. I don't care if it's Monday, the start of the week, or it's Tuesday, Wednesday. I don't care. As long as I've lost that much, I will sit out for the week and then wait for next week to re-prep, reorganize, and just get my psychology back under normal terms before I can go back with a fresh outlook on the market to perform the best. Okay, so that's number 2, having a max loss for the week. Don't just risk it all the time or anything like that. Be cool, calm, and collective as you go into the market. Number 3 is to understand the streaks. Okay, so sometimes there are winning streaks, you know, when a person wins 5 trades in a row, 10 trades in a row, however many. There are winning streaks and then there are losing streaks. So both of these things are important to understand, because normally what happens is a trader has the understanding that your trades can only end in one of 4 ways. You know, if you're referring to the free trading package that I've given out to many of you guys, I believe it's like 400 or 500 of you guys have now had it. All of your trades can end in one of 4 ways. Either it's going to be a small loss, small win, break even, or big win. There's no chance for big losses. Okay, so that ties into risk to reward as well, but winning streaks. So we understand that small wins, small losses, and break-even trades will balance themselves out. A majority of the trades will be those. Like, I go through and explain the psychology of the days of the week. Monday is more of an indecision day where a lot of people go back to work and they feel, you know, they're not really motivated for the week. It's Monday. They're not really motivated, so you get a lot of indecision. You get a lot of half-assness on Monday, okay? And as you go into Tuesday, you get more of a pullback, more of a regaining of before things take off on Wednesday, Thursday, and Friday being the most active, the most predominant in most cases. I'm not saying every week and every day is like this, but on an average, because that's what we're dealing with when we're trading averages, okay? So understand the streaks, understand that this is one thing when I talked about the psychology and the mindset of trading, why we never skip trading setups that occur, because we never know which trade is going to win, which trade is going to lose, and we don't want to skip out on them because we might be in a losing streak. We might lose 5 trades in a row, and if you're risking 1 to gain 5, losing 5 trades in a row, that one winner that you do get will balance out and equal the previous losses that you ended up taking. The next thing that I want to talk about is optimizing. Okay, so it's important to understand that you need to keep a journal as you're trading. In a way, this is my journal where I can get the feedback, I can see how I was feeling and all that type of stuff from this content. And there's other content that I keep for myself just to understand how I'm feeling, what was my mindset as I went into these trades, and just the result. I marked down everything. The free trading package also describes writing down what things you should be keeping track of for your trading journal. And so I just go through and I'm understanding, okay, this, like, as we went to this week, we optimized it in a way to draw our support and resistance from the daily time frame, just like that, just from the daily time frame, keeping our ideas of market structure and everything like that's happening. And this actually goes into the next point that I want to talk about, just basically the weeks that we go into trading. So Normally the way we're doing this is we take the weekly candle and we follow the weekly candle. If we look at the weekly, we can see that a lot of these candles are very predominant in one direction. It trends really hard, ideally, right? So that's one thing that we normally follow. And then we go down to the 4 hour. We draw about 3 to 4 support or resistances, depending. If we're going long, we'll draw supports. We're going downward, downtrend, then we'll draw resistances for a pullback, and continuation is what we go with. So that's not how we normally go about stuff. But then this week it was a little bit different. We didn't consider the weekly. We just went ahead and drew our zones from the daily time frame, and then 4 hour produced our entries. So that's one thing to understand how we shifted. And now that I see the results from this, I will definitely just go back to what I know and what a lot of you guys just like. Doing it from the weekly time frame, just like the random replay trades that I've been posting on YouTube, is just to understand, grasp, and come to an acceptance where I can refresh my mind and go back to next week with a clearer picture for what's going on, understanding how we can adjust from last week, and basically just have a comparison between both performances. Okay, so I will definitely be reverting back to the previous way analysis. Those analysis were outperforming this by far, with normally 200, 300, 400 plus pips for the week. So that's all I really got to say for this video, guys. Thank you for tuning in. Remember to journal your trades. If you're still struggling, you can send me a message, but also check out the free trading package, because that's where I go through and explain exactly how I go about my trading and how you can pull your own trading plan from that. Also, I want to say for the people that have the free trading package, as February 1st comes, there's a little special going on. So just be on the lookout, be aware for that. That's something available to everybody. Yeah, that's all I got to say for this video, guys. Thank you for tuning in, and I'll catch you on the charts next week. Also, I do want to say, for February, since February is starting as a new month in about 2 days, I will be opening the Telegram chat for all of the trades that I'm actually taking to you guys. I'll post this in the Telegram, so if you're not on the Telegram, check the link below and just get in. The link to everything is actually below, but nonetheless, only the majors are going to be sent to the Telegram, because I don't want to flood the Telegram with too many messages and things just like that. But I'm going to set up a separate chat where I can go through and I'll cover basically all the pairs, all the majors and minors that I'm actually trading. And then we'll have more pips for everybody to grasp on. Like the pound Canadian really outperformed this week with a strong bullish run, and next week is looking like this bullish run will continue. So that's all I got to say for this video, guys. Thank you for tuning in. Catch you on the flip side.